Good morning, ladies and gentlemen. A very warm welcome to one and all for this session on Precision Price Action webinar series. The topic of today's discussion is the stop loss hunting theory. Before we move on, I would like to extend my warm regards and best wishes for Diwali. All of you have a fantastic Diwali, celebrate the moments, and I wish you all the health and wealth that is pending, which is due towards all of you. Okay, so let's move on with the presentation right now, and kindly note this video is being recorded and it will be posted in our website. Okay. How many of you are a parent, traders who have children? How many get heartbeat on trading days, extends more heartbeat on expiry day? How many of you think this is true? How many of you are like this? And how many of you are like this? Show off attitude. If I'm a trader, the world would respect me. Eventually, it's not true. You go and tell somebody you're a stock trader, they will not even listen to you. Fathers don't give their daughters also. How many of you agree, friends? How many of you are here for solid alerts and tips? How many indicators do you use, friends? RSI, MACD, stochastics, SMA, EMA, ADX. And how many traders believe in this? And is this not true? Married traders. And the best investment in life is always this. What is the best the beauty about this liquor industry is, friends, when we are happy we boost, when we are sad also we boost. How many, how many, how many non-teetotalers are there? That's by Benjamin Franklin. How many of you know Bernard Baruch? He is the contemporary to Jesse Livermore. This man also traded during an era when Jesse Livermore and W.D. Gann traded in the Wall Street. He has written a fantastic book, an author. So he predominantly traded in the 1930s. And this is the interesting paradigm about stock market. It is like a producer making a cinema. You take any industry, Bollywood, Tollywood, Kollywood, Sandalwood, whoever it is. The purpose of any cinema is to make a hit. But out of 100 cinemas, only 5 cinemas make money. The 95 don't make money. And the 95 producers will also think that they will make a blockbuster cinema before they even started. That is human nature. And that holds good for our stock market also. A true trader is one who always introspects, analyzes, deep dives, interprets data. There is no stock market without data. And data is the ultimate truth in the markets. And how many of you think that integrity is very, very less in the financial markets? In trading, it's not about how much money we make, it's all about how much money we don't lose. Okay, this is one powerful statement. If anybody understands that, everything is fair. So generally I design my programs and presentations. I don't get major feedback from people. The reason is this: I know the journey, and hence I try to drive the sessions in perspective to that. So ladies and gentlemen, for those who don't know me, I am Ashok Devanampriya, based out of Bangalore. I founded this company called Kautilya Capital. We are predominantly algorithmic traders. We build strategies for financial markets. I am a techno fundamental investor, GAN practitioner, precision price actional positional trader. I am an intraday algo trader, and I have been running algo trading from the last 10 quarters roughly. A mechanical engineering graduate with an MBA in the UK and some specialization across various verticals about financial markets. So spent 15 years in the industry, and currently I have been doing full-time trading from last 3 years, probably serious introspection or studies in the markets from 7 years, overall about less than 10 years in the market. And these are the companies I run. I run a company called algomaster.in, which is in the process of building mechanical quant based strategies for financial markets. We have a bunch of strategies. We are also in the process of building more strategies for financial markets. Okay, for more details, log into algomaster.in. And the second one is called as an I3T3 mega webinar, one of the most comprehensive and money back guarantee programs ever offered in this country. And I have trained more than 250 people till date, out of which about the failure rate is about 5 people, which is about roughly you know 2%. So which means 98% success we have got. And I also ran a traders cafe in Bangalore. It was once upon a time first of its kind. We are successfully running this cafe. It is an exclusive place for full-time professional traders to come, sit together, trade, and eventually drink, breathe, eat and leave stock markets on a day-to-day basis. We are based out of Jayanagar in the southern part of the city. If any one of you want to come and experience it, feel free to come for one day to our traders cafe. You can come and sit with us and definitely trade with us. Of course, beyond that, it would be chargeable. And finally, Kautilya Capital is my parent term of all the companies that I formed together. And we are building lot many things to the traders community. And if you guys want to know more about us, go to any of the websites, and or I'll speak to my team directly. Words of caution, friends. Trading is a very serious profession. There is no secret formula, and I do not have any secret strategies to share with every one of you. And anybody who claims they have a 90% winning strategy, I don't even waste my time with them. Okay, and the best way to stay away from wrong people is to confirm. If anybody says they have a strategy with 75% win rates or more, just write them off right away and stay away from them. Okay, no professional trader ever in the planet ever claimed he had a 75% accuracy. And the father of speculation, Jesse Livermore, whom we considered as the god of trading, himself had an accuracy rate of 43%. and our Telegram, Twitter traders claim 90%, 99% accuracy, and that itself is an illusion. Is that sensible? Any questions on this? Any argument? I don't have any secret formulas to share, friends. So all that I have is respectable, sustainable, realistic, passionate models with a very high degree of RR and win rate. And if you ask me my performance in the financial markets last 10 quarters, friends, every year I have made money ever since 2016, 16, 17, 18, 19, all 4 years I have made money, which means I am 100% successful on a yearly basis. And if you ask me quarter on quarter, I almost 8 out of 10 quarters I have made money, which means 2 quarters I have lost money. On a monthly basis, I am roughly about 50 or 60% successful, which officially means that I might lose about 5 out of 12 months in a year. Okay, so by all standards, compared to the Twitter and Telegram traders, terminal traders don't perform. Okay, so terminal traders are the worst traders in the planet because they don't have such high degree of accuracy like the other ones do. Anyway, so we don't sell dreams here, we are here to share truth. And anybody interested in full-time trading, my serious 4 rules of caution: don't ever stunt, don't ever come out without any proper management of your positions. Okay, the most important thing is you need to be debt free. You need to have minimum 2 years of your expenses in your mother's or wife's pocket. You need to have an exclusive trading fund, and finally you must be making some profits while trading part time, maybe at least 25% of your home salary. If you guys don't do it, then you will be in a very serious problem, friends, because we are all full-time traders. We underwent a lot of things when we came out and got into full-time trading. So stay caution and recognize the realities about the risk of financial markets. So so coming back to the high level perspective, we all fight with institutions who are the big money, who have the power to move the market. They don't have any stop loss because they have a lot of money, and all they want is liquidity from retailers like us. Okay, the institutions are all FIIs, DIs, and all those people with 500 crore or plus money, who come with a very huge pocket, with some of the brightest minds in the world from the IITs, IIMs, Harvard, Stanfords, Carnegies, with some of the biggest funds, plus probably some of the the brightest technologies and the world's best psychology as well. So we are ordinary retailers. We need to fight them out in a smarter way so that we make reasonable profits in the long run. Okay, if we have to fight them, we need to be strong, but we are not strong. Okay, we are all retailers. We can't move the market. We can't do trading ever in our life without a stop loss. Okay, anybody can argue saying, Ashok, what big deal, I will hedge my trade, I don't need a stop loss. But remember, your hedging also cost money, because hedging is insurance, so that would cost insurance premium, and hence you are not escaping from the clutches of the stop losses. And all of us feed liquidity to the institutions, right? Let's move on. There are only 2 kinds of retailers that I know. One is a breakout trader, one is a support resistance trader. In fact, in the last session, I even spoke about these concepts. Today, I'll try to introduce how a price action trader comes into the scene when these traders fail. I bring a different perspective into the conversation today, and I'm sure I will deliver something new as we progress into the further discussions. Okay, so the breakout trader officially thinks he is a tiger, while the support resistance trader thinks he is a lion. Both think they are correct. You remember the statement? Okay, the beauty of market is about people, 2 people, 1 buy, 1 sell, both things, both are right. So these 2 are the guys who think they both are right, but in reality they are not the carnivorous, they are the herbivorous. Okay, this is the reality, and there comes the institution which is much stronger and which can chase everybody out of the game. This is the real truth about markets. If we want to fight this cheetah out, we need to play our own game in a structured and a process manner. All right, friends. Any questions till now, friends? Okay, so generally what typically happens is there is a breakout trader. Okay, well, how he trade is he is waiting for a breakout of a resistance and support. So price is traveling up, price comes down, and there is a resistance there. When price goes and breaks that resistance, the breakout trader will eventually come and place the game. So what happens, he is waiting for the trade, but the price retraces from the resistance, it doesn't break out. This is, in traditional world, you call it the double top. Okay, the price again goes up, comes back, for which means the resistance is much stronger, and this you call it as triple top in your traditional trading world. Eventually what happens, at one point of time the price is broken. When the price is broken, the breakout trader is going to put all his trades here. He will put his buy here. Okay, this is where his long is, long here, and finally he will put his stop losses below. Why? Because he is trading breakout. In this process, what happens officially is that the price comes back, hits away the stop loss, and cheats the breakout trader. And this is what we discussed in depth in one of the previous trainings. And those of you friends who are looking for basics, go back to my YouTube channel and search for my name, Ashok Devanampriya, and just follow and subscribe this channel. Roughly every fortnight I will load one video. Okay, I don't want to junk or pump wrong stuffs into my channel. I want to only pump high quality videos here. All right, because most of the videos are really powerful videos which I have shared. Okay, go through it. All right. Coming back. Okay, now the next guy is the support resistance trader. He wants to only trade support and resistance. There is a resistance. The moment price comes there, he wants to trade. And the scenario in the first case is something which he is looking for. But unfortunately, price doesn't go and it creates a resistance below. It creates a resistance below a resistance. It creates a minor resistance. And price does not show any kind of reaction when it comes there, but it breaks it. When the resistance break, what this guy think, okay, this lower resistance is weaker, the upper resistance is stronger, so I will try to play there. Okay, when that happens, okay, he is waiting. But the beauty is when price goes to the lower resistance, again it will react. This is a powerful concept which most of the breakout and support resistance traders never understand. Okay, this concept can generally be dealt in micro detail. Anyway, leaving that aside, at one point of time the price goes to the support resistance point, it gives a small reaction, and the support resistance trader is waiting for his entry, and this is where the story emerges. So what happens is he will take his entry here. This is short. He will go for a short here, and his stop loss is here. But what happens eventually, the price breaks out, eating away the stop loss of the support resistance trader. And this is how the typical price behavior happens all the time, cheating retailers. Okay, and many of you would have understood this if you have attended the previous session. I am not spending too much time on this because I want to tell something new today. All right, those of you who are new to this game, go back and watch my previous video on fake out theory to understand how the war between breakout trader and SR trader happens and how the cheating happens. Okay, now before I jump into the next interesting story of our conversation, I will take a small 1 minute pause. Let me know if you guys have any questions right now. There is a question by Pani. He says, does institution won't fight against each other? Like, can there be a possibility one wants to sell at same, another wants to buy? Absolutely. How many of you know the food chain? How many of you know that a small fish eats the medium fish eats the big fish is eaten by the snake eats the eagle. I mean, the snake is eaten by the eagle. Okay, so there are all varieties of scenarios in the entire trading chain. There can be a small fund house who is eaten by medium fund house, a medium fund house can be eaten by bigger fund house. But anybody with a process and discipline can beat anybody. That is the beauty of stock markets. Okay, right. Somebody asked, sir, is the concept similar to Quasimodo? No, Quasimodo is also is a dual cheater story, but the cheat that there, of course, there are two kinds of engulf there, but there every engulf has a different story to say. One brilliant question comes in, what is the percentage of breakout and support resistance trader? It will roughly be 50-50 only. Okay, and somebody asks, Nitin is saying, sir, how do I figure out it's a real or fake breakout? Again, there is a process to it. We will talk in the subsequent slides. Okay, now why institutions try to cheat us? Why they want to cheat? Because we all know the purpose of institutions is to make money. In our case, we also want to make money. The only difference is that they have lot of money, we have less money. Okay, they are they are they are united, we are divided. When millions of retail traders join hands, we can fight the institution out, but there are million minds. It is technically impossible for million people to have a single view about markets. It is not possible. It is technically impossible, and they will encash on that scenario. Okay, when they don't have a liquidity in the scenario, what they will do, they create fake outs, they create liquidity illusion, they create fake support resistance, fake breakout. So they create everything to tempt a retailer to trade the game that they want. Ultimately, when everyone starts participating, the liquidity crunch is solved, the institution got its liquidity, it will take its filling and takes the trade in the direction of its choice. Okay, now let's get into the crux of the conversation. Okay, what happens when a support resistance trader is cheated? Okay, the real game happens like this. There was a resistance which we spoke, and the support resistance trader, as you all know, is waiting to trade at the top, but it forms a minor resistance. Now remember, he has two options to trade. Now, being an SR trader, either he can short here or he can short here. Correct? Now what happens is, price comes and breaks the lower one. When price comes and breaks the lower one without giving a hint, you are happy. The SR trader is happy and he is thanking God that he didn't get into the trade, lucky guy, and he is telling, now I will wait and trade here when the price comes here. All right, at this point of time, what happens? The price further comes down. And always remember this, according to the traditional support game, resistance game, once a resistance is broken, a support resistance trader never takes a trade. Correct? How many of you agree that this level is no longer a level to be traded because that resistance is broken? There is no resistance there. Anybody? Anybody? All right, so what happens is, most of the times those levels work because retailers don't understand its importance. So price would react from there. There can be a small reaction, there can be a big reaction also. But eventually what happens, when price comes to the top, it gives a small reaction. Okay, retailers believe in confirmation. Okay, retailers generally believe in confirmation. Okay, and this is their confirmation, and that is when they take a short with a stop loss above, but eventually price goes up and the support resistance trader is killed. Okay, whenever a support resistance trader is killed, a price action trader will emerge. Whenever a support resistance trader is killed, a price action trader will emerge. So what happens once you are looking for this support resistance trader is looking for a what trade? He was looking forward for a short trade, but price cheated and went ahead. Who took the price upside? Can somebody tell me who took away the price upside? Who took away the price upside? The institutions took away the price upside, which means the institution wants to go up. Okay, when such a thing happens, when big guys wants to go up, what should a smart price action trader should do? He should also look forward to go up. He should also look forward to go up, and that is when he will put a long trade. At that point he will put a long entry with a stop loss below, and eventually price comes in, and if the level is strong, the price zooms ahead and the price action trader makes money. Okay, now what really happened? This is an interesting concept. This is nothing but an FTR. It is nothing but an FTR. It has a resistance here. What is H1 high 1, which got broken and finally formed another resistance called high 2, and after that resistance high 2 is formed, the price comes down, creates some accumulation and finally goes away and breaks that high 2. When such a scenario is formed, it is called as an FTR, and that is a beautiful demand FTR, and this is where we want to take a trade. And price comes inside and zooms ahead to create a very powerful risk reward entry. In our journey, we always talk a minimum of 1:3 to minimum of 1:5 in our total risk reward journey. So many people keep asking me, Ashok, what would be the win rate? I say I don't care about win rate. Even a 30% win rate is phenomenal for me, because I am looking at 1:3 to 1:5 RR. Everyone understood this scenario? There's a beautiful question from someone. He says, only after the event we will know that institutions entered. How do forecast beforehand? Can you read an institution mind? You can't even read your wife's mind. You don't even know what your wife cooks for breakfast tomorrow. How can you go and read what the institution will do tomorrow? No trader in history ever made a fortune in stock markets by forecasting. The only trader who was an exception for this was W.D. Gann, who believed in his what do you call, the concept of price and time. And of course today everybody wants to make use of that name to make some money, but none of them are serious practitioners of Gann, and nobody knows Gann according to me. At least we know whatever Gann taught in his books, but people talk many things that Gann never spoke in his books, but that's how the scenario is. Okay, so one of our colleagues says he's got a win rate of 85% in FTR. Okay, that is amazing. Probably in the recent 3 months you might be getting the direction right, but I personally believe winning a minimum of 30% with a 1:5 RR is phenomenal. It's phenomenal. Okay, the only reason traders fail is because of greed. They want to double money every month. It is as good as a doctor who joins a guy who finishes 12th standard, joins a medical college tomorrow, but wants to do a open heart surgery day after tomorrow. It happens only in cinema and Three Idiots. Okay, and it is for excitement, and nobody can do it in real life. Good. I hope you guys understood. So now let us see how the scenario emerged in the other case. Okay, now we have a breakout trader. A breakout trader is again looking for a breakout. There is a strong resistance. He wants a breakout, but the price reacted S&R, which means whatever scenario a support resistance trader wants, that has come, but a breakout trader scenario has not come. That is a double top. That is a triple top. Though breakout has not come. And eventually at one point of time, there will be a breakout. Now you might ask us, Ashok, what is the right breakout? Is it a good breakout or a bad breakout? You will not know. Irrespective of your so-called intelligence, if you even with a confirmation entry, your trades can fail. Okay, because no concept in the world can, no concept in the world can forecast, at least today. In today's era, there is we don't have anybody who can forecast with the highest degree of accuracy, and some analysts claim themselves to do it. But the funny part is, those analysts with highest accuracy, they themselves don't trade and they don't believe in their model. If I have to believe, I should not take stop loss, probably sell my house, take a trade, buy my house back, a remaining one I can buy another house. But that doesn't happen. But eventually the price drops. He is waiting here. The breakout happened. He was super bullish. He will go long here, and his stop loss is here. And the funny part is, the price breaks down. So whenever a breakout fails, okay, the breakout trader is eliminated and the price action trader comes into scene. He will look forward for a short entry. He will not look for a long entry because the institution wanted to bring the price down. So you must go with the institution, and that's when you need to trade like this. That's a short entry with a stop loss, and finally the price comes inside and there will be a massive return. And this pattern is our Quasimodo. This is our Quasimodo pattern, the double cheater story. Everyone understand that? Good. Sounds good. All right. Now let's get into additional stop loss hunting process. This is an example of Adani Port. Okay, there was a strong resistance at 429. This is Adani Port. The script is Adani Port. Okay, this is Adani Port. There was a strong resistance here. This is 430 roughly, 430. So look at this, price comes here. Okay, price came here and fell down. Very good, right? Who won this game? Who won this game, friends? Who is the winner here? What kind of trader won this? What kind of a trader would have made money? Okay, I know shorts made money, but who took the short? The support resistance trader. Very nice. Okay, now similarly, now you can ask me a question. Why this price did not come, and why did it price reacted from here? Why not it didn't give a fake out? Why not it didn't hit a stop loss? There are many things that will seek answers, but sometimes you don't get answers. Look at this beautiful example. Ashok Leyland. Recently what Ashok Leyland did, okay, this is Ashok Leyland. Recently it was 56.95, 57 was it recent low. It didn't come and touch, it just came down by 0.1 and zoomed up. And zoomed up. Okay, it came down and zoomed up. Even in this case, an SR trader won. Okay, and mind you, in SR trader, if he is waiting to take a trade here, he has not got a trade. How many of you understand this? So SR traders also partially won. Not all SR traders won because the price did not reach exactly to the resistance level. How many of you get that? This happens a lot of time. Amit says this happens a lot of time. Of course it will happen. And now I will give you a different perspective. Okay. Everyone knows the war between US forces and Taliban in the Afghanistan belt. I don't know how many of you follow global history. Okay. The Taliban was created by the Americans to keep the Russians at bay. Okay. And they gave them weapons, and today the northwestern frontier province, which is called as the Switzerland of the East, is full of terrorism. Okay. And that entire region is suffering from brutal bloodbath. Now America is coming and trying to establish peace in a land where they created bloodbath. Okay, it is like pinching a baby and then soothing a baby. That's what Americans do, and that's what they're best at. Nevertheless, in our conversation, America wants to bomb on Taliban. All right. Now what happens is, let's say they want to throw a bomb. The cost of each bomb is $1 million. And there are these hundreds of guys conducting a meeting. Okay, the Talibani guys, and they wants to throw a bomb. Correct. And when they throw the bomb, all the 100 terrorists gets killed. What is the cost of killing a terrorist if the cost of each bomb is $1 million? The cost of killing each terrorist is about $10,000. Yes, can everyone give me a check? Yes or no? Okay, the cost of killing a terrorist is just about $10,000, because in our example there were 100 people going for a meeting. Now imagine a nasty guy who is not as disciplined as those 100 people. There was a 101st guy who went out for a smoke. He went to a cigarette shop which was 100-200 meters away. He picked the cigarette. Exactly during that time the bomb exploded. Did he escape? He escaped. The independent terrorist who went for a smoke when America bombed the meeting point escaped. Now they are putting their bombs from the sky. They can also see this guy. They can see this guy. But will they throw another bomb at this individual? Can anyone answer me that? Will they throw a bomb on this individual? Some says no. Can you explain why? They will not throw the bomb because the cost of killing this single guy is 1 million. Now bring the same story into the world of trading. Always remember, when an institution comes, okay, when an institution comes to take away the stop losses, okay, here is one example. Look at this. This is ACC Limited. Okay, this is ACC Limited. The previous low was 1423. The price came down, gave a small kiss at 1417, gave a small kiss at 1417, which was hardly 6 points, 0.5% roughly, and took the price up by at least 10 to 15%. Why is that? In the previous case, we saw the price comes, it doesn't even touch the SR line and zooms ahead. So the SR guys didn't take an entry. So which ideally means operation success, patient died. The SR trader is theoretically correct, practically no trade because he didn't get his filling. But in this case, if he takes the trade, SR trader, he is cheated. Everyone get that? In the previous example, the SR trader did not get his trade. In the current example, the SR trader got his trade, but it failed. Everyone agree? And I'll show you another interesting scenario which happened recently. This is Adani Power. This is Adani Power. The price was 68.66. See this small jerk and then see the fall. Why did that happen? Why did that happen? The point here is the institutions want liquidity. They will go and they went up definitely above this point. There were many stop losses of the SR traders. It went up, took away all the stop losses and came down. In case one, price goes and stops below it and falls down. In case two, price goes and do a fake out and falls down. In this case, no entry. Here you have no entry, but target achieved. Here you got entry, but target failed. So in both the cases, you are cheated. In the first case, your trade is correct, but you didn't get filling. In second case, you got the trade, but trade it flopped, but you got filling. This is how the whole concepts of stop loss hunting works. Now remember, recollect the whole story once again. If you bring the same Taliban story into the conversation, always remember you are nobody. I am nobody. The institution doesn't care. Ashok is putting a trade, or Ajay is putting a trade, or Akshay is putting a trade. All he knows is he will take the price to a point where there is maximum liquidity. America will go to a place where there is maximum number of people concentrated. So next time they come and take your stop loss, tell yourself, curse yourself that you kept stop loss at a point where that 100 people meeting is going on. So if you want to escape the stop loss, where you should keep the stop loss, you must be that smoker who went for a smoke. By the way, smoking is injurious to health, friends. I don't smoke, I don't booze, so I recommend not not to smoke. Okay, this is just an example. How many of you understand this point? If the institution does not go and kiss the top and comes down, which means he has already got enough liquidity, number one, or number two, there is no liquidity there. Okay, so you need to observe, you need to learn a lot of things in the entire journey to understand all these traps and actions. Okay, so that is the whole crux of the conversation. So nobody will come to take your stop loss. They will come wherever there is excess liquidity. If you have understood this process, you are good. Number one. Number two, the only way to fight a bigger institution is to follow process. How many of you seen traffic? A single traffic man will control thousands of vehicles. A single policeman will control thousands of vehicles. Why? He has a process. He has red, blue, red, green, yellow. Similarly, a trader can also fight the institution only if he has a process. That is why mechanical systems will have an edge over the long run, unlike the discretionary ones. Unlike the discretionary ones. Okay. Summary of our learnings: the institution seeks stop losses, okay, and always stay away from high liquid zones. Now wait for stop loss it and think about an action. Okay, one important lesson for every one of you: always whenever you have a point, wait for the SR to be broken. For example, let's say this is an SR. Okay, wait for the SR. I will redraw it in a nice way. This is an SR. Wait for the SR to be broken and then look forward to take a trade above this level. How many of you understand that? Whenever you have a region, if you are an SR trader, all SR traders, I am giving you a idea that whenever, don't trade SRs, wait for it to fake out. This scene should be created and then look forward for a trade. That would be a reasonable idea, because you are trading away from the non-institutional zone and you are looking forward trade from a point where everyone else is moving upwards. Clear, Shobita? Is that a fair statement? Okay. Now the same thing we spoke here. Wait for the stop loss hit and think about an action. How to trade, that's left to you. Okay. And remember, institution do not come until there is lot more liquidity. And you might ask me, Ashok, once that SR zone is cheated, do you want to say 100% of the time they will not come back? Sorry, I never said that. I said once it is cheated, the probability of them coming back to the same zone is comparatively lesser. This is what I am talking. For example, this is an SR line. So there are two scenarios. Price can come here, okay, and then you can look forward for a scenario to take a trade. But what I am telling is that price can go up, or it can also be like this. So I am not telling it will definitely come down, or what it can come, it can go further down and also go up also. That creates another amazing price action story. Okay, everything is price action. The foundation of price action is engulf. If somebody asks me, Ashok, define price action in one word, I will say engulf. Okay, all right. So 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 I guess you got a glimpse of all those things. Okay, and there are close to about 10 very powerful price action power patterns, and it consists of almost 50 to 50 simple, advanced and super complex scenarios. Okay, so what we learned today is hardly 1% or 2% of the entire story. So the total price action consists of so many broader topics put together. Okay, so friends, so last time I conducted a workshop and this is the kind of feedback I got. Okay, I have finished a very powerful program, almost like 3 editions so far. We have trained 250 students, and I am conducting a workshop next month, all right, which is my 4th version of the program, and with more powerful version, because I have introduced a bit of additional topics on options also into the program. So out of 250, about 5 people took away money, and I don't mind. Those 5 people took refund and they left. And we had told we are one of the very few programs in the country which gives 100% money back guarantee. I mean it, 100% money back guarantee. And out of 250, hardly 5 people left, and we don't care. Okay, so if you are interested in learning this and travel this path along with me, okay, I recommend you to consider joining this program. And the fact of the matter is, this program is unique and special in a way that it is a lifetime learning program, which means you are an alumni of my program and you are not like attend the class and bid goodbye. No, there are people who joined me last year, 2018. There are many people who had joined me, okay, and they attended my classes last month, which was in August or September. Okay, which means if you pay only once, you are a student for life. All right, so that's my program all about. I am launching this program and it is starting on 16th of November. So definitely not 60 days, it is hardly about um, it's hardly about 20 days now. Okay, and there was a time we offered a money back guarantee offer along with a opportunity to make it, pricing free with our brokerage credit model. Now we have almost about 30 students who have already enrolled for my program. I have another 20 seats to grab. Okay, and my program is not ordinary. It comprises of learnings from 200 world-class classics ever written, and I have designed a very powerful super studio, and also I have designed some of the price action screeners also. Okay, what you see on the screen is my personal private library. Okay, so all of you should shoot questions. Vishal, wherever you buzz, that is the place where you ask questions. You can buzz there only. Friends, this is my money back guarantee offer. There is no hide and seek story. It's very simple. Okay, you enroll for the program, 100% money back guarantee. Okay, attend the first 2 modules of the program. If you're not happy, raise your hand, take full money and go home. By that, at least there are 2 great things happening. Number one, the product is respected, the integrity is maintained, the program is rewarded, and there will be zero casualty and nobody is upset. Even the guy who upset who got a money refund. So okay, and I don't care if few of them tries to do. People say, why should you do that? People can do it purposefully and let them do it. I don't care, because I really care about those guys who join the program, who don't want to leave the program because they believe that the investment that they do with us is a long journey ahead in times to come, because we are in this process, we are in this battlefield for a long time to come with the highest level of integrity. Okay, we have refunded unconditionally. We seriously don't know why people left, because that is my policy that I will never ask, but everybody is entitled to give feedback. That is my policy. Okay, that is the power of our content delivery, service, honesty, integrity and transparency. Okay, so I teach a lot of topics, not only those 50 topics of price action. I do WDGAN, I teach some of the powerful investment models, I teach options, I teach algos, and I also teach Elliott wave, which is not a part and parcel of the upcoming edition. I will introduce it next year. One of the very few programs in the country which has been packaged so well, and the pricing is kept at a level, by combining all the courses. If you split them, the price might look very big. And these are the new topics which I have introduced in my entire conversation: advanced Quasimodo, fake out, deep dive, options trading, Elliott and OI analysis. Okay, if you believe in long-term journey, okay, and we don't have any secret formula, if you recognize that you want to be a part of a valuable product and with series of learnings, which means if you enroll with us, you can attend all the future programs with all enhancements for free. And of course, you can talk to any of our 250 students, ask for references, whichever city you want, whichever person you want, we don't mind giving it to you. So you can even talk to them to get feedback. Okay, we are that transparent in nature. And here is the schedule: starting on 16 November, ending on 22nd December, with 3 months of reviews. Okay, last week review, yesterday's review I missed because of some priorities. Probably next week I'll again connect with the people, and lifetime access to all future webinars. This is the offer I have. And the total combined fee, if you split it into individual topics compared to all the programs that are available in the industry, it would be a bomb. But I gave an early bird offer last month when I did a workshop. We charged 35,000 with 100% brokerage credit for first 25 students only. Today we have cleared that offer because I have around 30 students already on board. Okay, I have 20 seats to be grabbed, but what I can now, the current modified price is 40,000. Okay, but we can give 50% brokerage credit. Okay, for that. Now, what I can do, because of Diwali, I can do one thing. I can keep the price at 35,000, but I cannot give the 100% brokerage credit. I can only give 50% brokerage credit. Okay, if anybody is interested, go ahead, join the program with the 50% brokerage credit, and okay, at the same 35,000 price. Definitely cannot give 100% because most of the people have joined us almost 2-3 months in advance. They believe in our journey. so I have to recognize and respect them. Okay, if you guys want more information, this is my ID. You can buzz me on, okay, Telegram, that's my ID, or you can buzz me on my mobile number that is given there, okay, for any clarifications and confusions. Thank you very much, friends. Okay.